Hello, news traders. This is Miss Put Options, and my website is www.MsPutOptions.com, where I show you how to collect premiums on stocks that you don't even own. That's right, on stocks you don't even own by selling put options. Okay, you can best view my website if you go through Internet Explorer versus Google Chrome. Again, if you want to access my website, you must go through Internet Explorer and not Google Chrome. So again, my website is www.MsPutOptions.com, and today I'm going to make a short video concerning earnings trades and concerning the customized iron condor. Now, Mrs. Put Options is on vacation. I'm on vacation. However, I will not be placing these particular trades, but there are going to be three milestones going on in the world of the stock market on April 16th of 2014 and April 17th of 2014, and it's going to be on two different stocks, one being Google and the other one being Chipotle Mexican Grill. Now, first of all, this whole scenario is hypothetical because I just finished telling you, or I don't know if I just finished telling you, but today is April the 10th, 2014. So I cannot predict the future. But what I'm saying is, if today was April the 16th, 2014, and we place these particular trades, that these trades will be 95% chance of being successful. Okay, so let's move on how you place the trade. Now, let me tell you something that happened recently with Google. Google had a stock split, and now Google has two separate ticker symbols. It has the GOOG ticker symbol, which is Google, and then it has the GOOGL, which is also Google. The difference between the ticker symbols is that one, if you're a shareholder, you have voting rights, and the other one, you do not. Other than that, there's no big difference between Google GOOG or Google GOOGL, but both of them are having earnings on April the 16th of 2014. So let's go through the scenarios real quickly here so I can explain to you what's going on. Our first one we're looking at here, as you can see, is Google. It's currently trading for $564.14. Now, this is a customized iron condor. With the customized iron condor, we sell, buy, sell. Again, we sell, buy, sell. I decided upon 10 contracts, but if you want to decide upon some other kind of contracts, if you want to increase it or decrease it, that depends upon you. As you can see, the ticker symbol is Google, and we are talking about Google. The old ticker symbol of GOOG is the same as GOOGL. I told you earlier, the only difference is that one, if you're the shareholder, you have voters' rights, and the other one, you do not. So let's get on. Now we have our strike prices. We have two call options and we have two put options. So the goal of the iron condor is that it must fall. The stock must fall either above our short strike, our short call, which is 565, or it must fall below our short strike, our short put of 555. This is the only way that it can be profitable. If it falls here right at the 560, our call or our put, then our collateral, we would have to give up our collateral. So the likelihood of Google trading above these particular strike prices, if today were April the 16th, 2014. This whole thing is a scenario and is hypothetical because I, MsPutOptions, cannot predict the future. But what I'm telling you that if today were April 16, 2014, these would be the strike prices that we would be able to pick depending upon if all circumstances were correct when we're placing the trade. And I don't want you to go and place the trade using my same strike prices and come back to me later and say, well, MsPutOptions said if I use these strike prices, I will benefit by this, by doing this. No, that's not what I'm saying. What I'm showing you is how to set up the customized iron condor and how to profit. I'm not showing you how to use my same exact strike prices on April the 16th and believe that you're still going to be profitable. Like I have said in my webinars over and over and over again, the stock market is constantly changing. Would I use these same strike prices on April the 16th? Probably not. Probably not. So I don't want you to go in there on April the 16th and place these same strike prices, and then when you don't profit, you're mad at me. That's not what I want you to do. In order to learn how to place this particular trade, I would first want you to take my basic put options course, my basic put options webinar, and then from there I will go on to show you how to do this earnings trade. So right now, if today were April the 16th, 2014, where Google is coming out with earnings, their earnings statement, we would gain 35 cents. And how I come up with that number is the difference between our strike prices is only 5. As you can see, 560 to 555 is 5, and 565 to 560 is 5. So we would take 5, which would be a credit, and we would subtract it from this debit of $4.65, and that would give us 35 cents. Now somebody's going to say, oh my God, MsPutOptions just sat up here and did this whole explanation for 35 cents. I'm not finished. Let's do the math. We take the 35 cents, and I decided upon 10 contracts, and it's going to be 100 shares. That's going to give me $350 if I were to place this trade. Now, let's move on to the next Google option. And I'm sorry, I went to Chipotle Grill by mistake. But let's move on to the next Google option, which is GOOGL. Like I said, it's still Google. Okay, so GOOGL is trading for $567.04. Okay, this is a iron condor. However, I customize it. When you customize it, you sell, buy, sell. You sell, buy, sell. I decided upon 10 contracts, and our ticker symbol is GOOGL. It's a Google company, okay? April 2014. However, today is only April the 10th, 2014. Earnings are coming out for both Google, GOOGL, and GOOG on April the 16th. So this whole scenario, it can happen, but it's hypothetical. And this is a presentation and not a recommendation. So if I were to place this trade, and hypothetically it was April the 16th, and I decide upon these particular strike prices, if everything was going in my favor and I felt these were the strike prices that I wanted to decide upon, then my debit would be $4.80. Okay, and how I would gain a profit is that I would sell this option back for $5. Where do I get the $5 from? I get the $5 from the difference between my strike prices. My strike prices here are $5.70 and $5.65. The difference between that is $5. Again, I have a put option here that I bought for $5.65 and I sold the $5.60. The difference between the strike prices is $5. Okay, so 5 minus $4.80 is 20 cents. So 20 cents times the 10 contracts times the 100 shares would give me $200. Again, earnings is not coming out until April the 16th. MsPutOptions cannot predict the future. Would this be the same strike prices I would pick when earnings seasons were to come out? I cannot tell you yes, and I cannot tell you no. But what I can tell you is that during earnings seasons, high dollar stocks can be very, very, very profitable during earnings seasons. Now, let's look at our last one here. We're talking about Chipotle Mexican Grill. The ticker symbol is CMG. It's currently trading for $556.40. Again, this is an iron condor. We're customizing it. We sell, buy, sell. Again, we sell, buy, sell. I decided again upon 10 contracts. Our ticker symbol is Chipotle Mexican Grill, which is CMG. This is April 2014. But today is April the 10th, 2014. Earnings is not coming out for Mexican Chipotle Grill until the day after Google, which is April the 17th. So there are going to be 3 milestones going on the week of April the 16th and April the 17th of 2014, and this is going to be, the milestones are going to be because Google and Mexican Chipotle Grill are both announcing earnings on April the 16th and April the 17th. I do not have a crystal ball. Would I say if this was April the 17th, would I pick these same strike prices? Maybe I would, maybe I wouldn't. I would have to evaluate it once April the 17th got here. Please do not place a trade based upon what I place because the situation and the scenario might be different. That's why I say it's very important to first take my beginner's course and then go on to the advanced course in order to understand how earnings trades work and how the iron condor works, the customized iron condor. Now, once again, this is going to be a debit initially of $4.70. The difference between our strike prices is 5. The difference between 560 and 555 is 5, and the difference between 555 and 550 is 5. So $5 minus $4.70 will give us 30 cents. That 30 cents times the 10 contracts I decided upon times the 100 shares will give me $300. All right? So now, let's look at our profits. All right, once again, this is the customized iron condor. Our first Google profit gave us $360. Our second Google profit, which ticker symbol is GOOGL, gave us a profit of $200. Our third trade, which was with Chipotle Mexican Grill, gave us $300. Now, we already said that Google is coming out with earnings on February the 16th. Oh, I said the wrong month. On April the 16th, 2014. And then Chipotle Mexican Grill is coming out with earnings on April the 17th, 2014. I do not have a crystal ball. Would I use these same strike prices when those dates were to arrive? Probably not. This is a presentation, not a recommendation. Do not sit here and use my same strike prices and believe that you're going to profit 6 to 7 days from now. I do not have a crystal ball. I cannot predict the future. You have to be able to comprehend when to place an earnings trade and when to do a customized iron condor. So, basically, in a nutshell, if I were to place these two, well, I should say three trades, my profit would be $850. I would gain it during expiration Friday. When expiration Friday came, I would gain this $850 if everything went in my way. So, not went in my way, but went my way. It would only take me 1 to 5 days, depending upon if I was able to close the trade out earlier or not. But more than likely, it would take me about 5 days to gain $850 on all three trades. Now, you can reach me again at my website through the Internet Explorer at www.MsPutOptions.com. If you have any questions, you are free to email me at MsPutOptions@gmail.com. Again, thank you for visiting and thank you for watching my video.